Hi everyone, it's Grace. Welcome back to my channel. There's a lot of things happening this week and I have been watching very closely about the policies as well as the announcement made by the Fed and the market movement day by day. And the Fed just made the announcement of tapering by reducing $10 billion of Treasury securities and $5 billion of mortgage-backed securities per month on Wednesday. This decision has significant impact on the housing market. So today, with the Fed tapering as the context, I'm going to talk about the explosive news about Zillow and its sudden action in stop buying homes and what it means for the housing market. Before we begin, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. Zillow just released news that it will stop buying homes since October 18th due to a backlog in renovations and operational capacity constraints. What it means is that there's not enough labor supply to complete the renovations, which are necessary to flip the houses that are already bought in order to turn for a profit when selling them again. But here's the thing. If it's just about the shortage of labor supply, an easier solution is to increase the wages so that they can hire more people to complete those renovations. But the news just came out that Zillow is laying off 25% of its current staff. So the real problem is definitely more than just a backlog and capacity constraints. So why might Zillow be doing this? The first reason is that the housing crash is here. It means that Zillow will be losing a lot of money by buying and selling homes at this particular point in time. Since the launch of 2019, Zillow has bought and sold more than 10,000 homes nationwide. And this is the period with the fastest growth in home equity. Now, all of a sudden, Zillow stops buying homes. So the other more plausible reason is that price drop pop up everywhere with greater reduction. Markets with extreme speculation will see major crash for the rest of the year in 2022. I mentioned in one of my videos that sellers automatically max out the pricing perimeter by doubling what it was worth, if not more. You can click here to check out that video. And here's the simple principle that explains the relationship between housing speculation and the Fed buying bonds. Housing speculation comes with the Fed aggressively buying bonds and goes away when the Fed tapers. Housing speculation also happens to corporate buyers. They buy in bulk and pay way over asking price to acquire as many homes as possible to allow fastest growth in home equity and expansion and domination in market share. As a result, inventory drops to the bottom and housing price goes through the roof. And Zillow's decision to stop buying homes reflects a simple market change. The post-pandemic housing boom is over. It reflects that buying houses in bulk is a very risky business, and Zillow no longer wish to carry it forward. It's now even selling homes at a discount. To simply put, if it doesn't get rid of the inventories at hand as soon as possible, it will suffer a much bigger loss. In some areas, most of the acquired homes are underwater. For instance, in San Diego, 94.3% of the homes are listed below purchase price. Phoenix is at 93.4% and Mesa is at 92.6%. Zillow simply took on a huge gamble and now wants to get rid of the inventories at hand to avoid a major catastrophe that's coming its way. In fact, just a few days ago on the 1st of November, it's trying to sell 7,000 homes with a total of $2.8 billion of an average of $400K per home. The pitch is targeted at institutional buyers, but the question is, will there be any takers at the asking price? Corporate buying behavior needs to make sense in two folds. First, home prices need to go up to build home equity. Second, the acquired homes need to generate satisfying rental income. But right now, only one of these two conditions are met. The rental price is not going to see an immediate reduction because the lease is in effect for at least a year. So it means that the rental price is locked in for at least a year. And the effect of the housing crash will take place in rental price a year later. So the message here is that Zillow is eager to get rid of the 7,000 homes as soon as possible to recoup the cash as much as possible. But here's the thing. To maximize the cap rate, institutional buyers will only underbid the price. And this is a sign that home inventories will be released into the market soon. The timing of the flash sale is also very curious because it announces just one day before the Fed's meeting from November the 2nd to the 3rd. There's no coincidence of the combination of these events. Perhaps Zillow already foresaw that the Fed will taper on its November meeting and is eager to get rid of the inventory to avoid loss. The second reason why Zillow stops buying homes is probably because it's running into liquidity issues. Buying a lot of homes all at once and above asking price requires a lot of cash, and for corporates, it comes from loans. If it doesn't sell the inventory now, it will probably not be able to repay the loan principal and interest on time. If Zillow defaults on the bank loans, it will probably be the next Evergrande where its bonds will be downgraded. Given that its stock price is already on a dive since February 2021, when it was at its peak of buying homes for flipping. Ever since then, Zillow's stock price has more than doubled down from the highest 200 points to less than 100 points. With huge loss, it is in its best interest for Zillow to sell off the inventory to avoid being insolvent and running into liquidity issues which may lead to bankruptcy. Since there are only a few unicorn companies that the government will bail out, the rest are left on their own places, wherever they may be. So bankruptcy is definitely not going to happen. And selling off the inventories at hand is the only option left for Zillow to survive. The third reason is that Zillow is laying off 25% of its current staff because now it's in survival mode by downsizing. On November the 2nd, Zillow also makes an announcement to lay off 25% of its staff. The announcement further proves that Zillow is not exiting the home flipping business just because of capacity constraints. If it doesn't lay off the staff, it would be operating business at a loss. So this is another major red flag that the housing market crash is here. Imagine that the labor cost is up per person because companies have to pay sign-up bonus, extra benefits, as well as increased hourly rate, and it's simply not worth it at this point. The fourth reason is that Zillow doesn't want to be the next Evergrande. The case of China Evergrande is a perfect example of the scale of trouble companies could be in if the loan goes to default. I made a video before about Evergrande. You can click here to check out that video. There will be no surprise that Zillow will sell more, if not all of its acquired homes for the rest of the year, and home inventory will be on the rise. So it's very straightforward that Zillow doesn't want to be the next Evergrande. It doesn't want to default on its loan repayment. It doesn't want to go bankrupt, and it doesn't want to be cannibalized by its competitors. It's just that simple. So this is a critical point in time where corporate buying behavior is drastically changing because the housing crash is coming sooner than expected. And here's the first important takeaway from today's video. Zillow is setting off the corporate behavior of other companies, either asset management companies, REIT companies, or other cash corporate buyers. They will follow Zillow's suit and start selling homes lower than purchase price. The last reason why Zillow stops buying homes is because it's facing antitrust lawsuit. A Texas-based real estate company called Rex is filing a lawsuit against Zillow and the National Association of Realtors for dominating the national real estate markets at the Western District of Washington Court. And the court denied both companies' motion to dismiss the claims made by Rex. Zillow's halt on buying homes is also intended to avoid hefty legal fines. So does this mean that there are no more bidding wars? For sellers, the largest growth of home equity is over. And for those who have not cashed out on home equity, they will not be able to do so because housing speculation ends as the Fed tapers just as quickly as it picked up at the beginning of QE5. It also explains why the home price drop is getting larger by the volume. In a map provided by Zillow, we can see that the home price drop is popping up everywhere in Miami in order to sell as soon as possible. The market is about to flip in favor of buyers because drastic changes in price is here. So 2022 will be a buyer's market where affordability will not be an issue anymore. So the answer is yes. Bidding wars will disappear as prices crash down. So is this good news for buyers? For those of you who are buying or investing, 2022 will be a good year because the market is in favor of buyers. So the second important takeaway from today's video is that the Fed tapering decision marks the end of housing speculation, and corporate buyers follow the Fed's policy when buying and selling properties. The shortest housing bust and boom cycle driven by COVID in history is over, and we're now in a housing crash for the rest of 2021 and 22. And 2022 will be a buyer's market. So this is today's video about Zillow stops buying homes and its set off of the housing crash. I hope you find today's video useful. What do you think? Comment down in the section below and let me know. As always, thank you very much for watching, and I'll see you on the next one.